All right, gentlemen, take a look at Bitcoin. Okay. So we talked about this on the stream just the other day. I may have just put this in the Discord. I may not have talked about it on stream, but either way, we're about to find out. I was looking at Bitcoin this way. So we've talked about this in the past. Classical charting. Okay. All right. Classical charting. You build long to go short. Distribution. Okay. People who are taking profits from this run up over here. We do a 6-8 month range of death. We break out, we come up, we tag the 1.618. What happens when we tag the first higher time frame fib? We come up, front run it a bit, and then we pump into it. This is where distribution starts to take place. So we hit our target, we build long, and then we break down. And then we break down. Okay? So what's happening here? When you're distributing and you're moving long, you're building long to go short, you're leaving lower levels of liquidity below. Okay, so you're not technically breaking and breaking down from this level right here where we consolidated for a moment. Okay, so you build long to make it look like we're going to continue to go up higher, make people think that they have still time to ape in, but this is really distribution. They're pushing price up higher to get people to buy in. They let go here, they catch it here, let go here, catch it here, let go here, catch it here, let go here, and then they let it die down. Okay, so that's distribution. You build long to go short. So 2020 hindsight made sense. This time we come back up, we reclaim the 1.618, and we start to build short. That's the difference. You saw here that we start to build short on this structure. So let me draw it like this. All right. So you can see pretty clearly that as we built here and distributed, we went short. Here it looked like we were building short to go long, right? And then you see what happened. So you consolidate above the previous all-time high, the 1.618 fib, turn it into support, and then we create this range. When you build short, you do what's called stacking highs. So we stack this high, and then we were coming to stack this high, what we actually did because we went like this and rejected. Okay. And when you stack highs like that, what you're doing is creating liquidity above. Okay, you create these three highs of liquidity. So here's how the market works. So you understand technically how it works. When you stack these highs and you create these this liquidity here, and there are actually heat maps that will show you this. We can take a look at. You're stacking short liquidity. Okay, so what does that mean? People who opened up shorts at the highs here are all in the money or all open in their positions. So there's liquidity up in these price ranges, meaning what? Well, when price returns up into these levels and you start to get wicks like this, right? This one right here, where you break this high, but we haven't broken this one. You start to close out people's shorts and you start to liquidate people out of their shorts. So you create liquidity when these people close their shorts. Why? Well, when a short closes, you create a market order buy. Okay? That's how a short works. When you open a short, you open a sell position. And then when you close a short, you enter a buy position. Okay? Opposite with a long. When you open up a long, you create a buy order when you open it. And then when you either get liquidated or you close your long, you create a short order or a sell order. Okay. So why is that important? Well, when you stack liquidity like this, and the liquidity up here is going to be built up of what? It's going to be built up of short positioning, because these were the highs. People short it back down. These are the highs. People short it back down. You didn't clear these highs. This is why we say building short to go long, is because when you leave these highs stacked above without getting taken out, right? So this high gets left, lower high. So it doesn't take out this liquidity, doesn't close these people shorts. They're still in the money. They haven't been liquidated. You understand? So they're still open. The sells are still open. Didn't take the high again. Keep the shorts open. Didn't take any of these highs, but you stacked them. Okay. Now we break out here. This move here is a retest at the top of this range. But as we break higher and price moves above these levels, these highs that were stacked, what's going to happen is you're going to get a cascade of short positions to either close or get liquidated because they hit their liquidation price as the price went up higher. And all of those shorts closing together creates this event where it triggers a bunch of market buys, and that's what continues to pump price up higher. That's how you get those big pumps. Because when you have no longer any shorts open, suppressing price down, you can rip freely. So that's how a market works. So if you're building short like this and you're stacking up highs and you're able to break all the way up and back above and push through those highs, that's when you get a fucking big breakout. Okay. So that's what we had been doing. I said, all right, cool. Looks good. Like it. So we're still running. This is either going to happen this week or next week. We're definitely going to break out. And then let's see. What was I going to say? Oh yeah. Global liquidity. Another reason that we had known that the bull market wasn't over was for this indicator right here. So let me actually get rid of these drawings. Okay. So here's global liquidity. Let's look at the weekly. Yeah. Okay. So global liquidity across the globe is continuing to move up higher. I mean, I've been saying that this chart matters. This chart definitely matters. Why? Because the more liquidity that's available to drift into markets, the higher price floats. Okay. So we top here at this level with global liquidity, money that's available, monetary supply. Okay. When monetary supply was at this all-time high, that's when you get the lagging effect from Bitcoin, and you see Bitcoin go up to what? New all-time highs. Fantastic. So we'll call it right here. Okay. We pull back in liquidity. Liquidity goes down. What happens to the price of Bitcoin? Lagging effect. Liquidity goes down. You get this big nuke. Okay. So now what? Well, global liquidity from here had ran up higher, broke through its previous all-time high, and ran even much higher than it was before. So naturally, if this is a leading indicator, this is going to be lagging what global liquidity does. What do we think is going to happen here? Again, we've been saying this. At some point, it was going to happen. Massive uptrend, steep uptrend. Bitcoin pushing back up higher. If global liquidity is at new all-time highs, significantly up at new all-time highs, what do you think is going to happen to Bitcoin? Just a little tiny break of previous all-time highs, or we're going to go up much higher? We're going to have a significant break to new all-time highs. It all makes sense. We've been saying this makes sense. Macro, we're still bullish. Macro, we're still bullish. Doesn't matter what happens to altcoins. Doesn't matter what happens to the local price action these last couple of months, etc. People can't handle it, etc. It happens. But we weren't in a bear market. We didn't exit positions for a reason. Because of this, the cycle's not over. And we played this beautifully, as mentally challenging and exhausting as it may have been for some of you. We held. At least I did. We held our positions because the cycle's not over. So we're at new all-time highs with global liquidity. Fantastic. What else is confluent with this? Well, now you have equities back at all-time highs.